Good morning, everyone. It's Jeannie Mulhern from Soul Property Advisors.
And I'm Liz Croft with Soul Property Advisors, and we're joined today by Mesha Dimitriuk from Essex Mortgage.
Welcome, Mesha. And
Good
happy
morning,
May
Judy.
1st to everyone. I just can't believe it's May 1st. What about you guys?
It is Beltane.
Oh, gosh, this
Yeah.
year's just flying by, even though it's pretty boring.
It is beautiful outside, though.
Shelter in place, trying to find some things to do, be productive, grab old pictures out of the shed and start putting those together, just finding projects to do. So anyway, we're very happy to have Mesha today. We've been asked many times about, especially from first-time home buyers, but also from buyers who are getting ready to maybe sell their home and purchase a new home and haven't done it in a while. And there's several different myths out there in terms of what is needed in order to get a loan, and you can get pre-approved for a loan at any time. So we're really fortunate to have Mesha with us today to talk about what the process is for not only first-time home buyers, but also those who are thinking of getting a loan and maybe purchasing another home or refinancing. So Mesha, turn it over to you.
Wonderful. Thanks, Jeannie. I appreciate being here. So we're hearing a lot about in the market right now is that the variety of different lenders have different rules. And buyers are contacting me saying, I hear that credit score requirements have gone up. I'm hearing that there are tighter loan restrictions. And what I encourage all buyers to understand is that the opportunity available to you is customized to you based on your specific set of circumstances. At Essex Mortgage, I'm very pleased to announce that we have not increased our credit requirements or increased the reserve requirements. We are dealing with a restricted lending environment on larger loans such as jumbos, but we still have no money down purchase. We still have lease to own for people who are overcoming situations and looking to clear up their home ownership opportunities in the future. So still an abundance of availability in financing and a plethora of loan options to suit and customize for each individual set of buyers' needs.
No,
I know, Jeannie, we've talked about this before in the past, but you asked me once about some credits from the seller to help ease a buyer's ability to get in and whether or not they had to come up with just a down payment plus closing costs. And Liz, I think you have some interesting material on this.
I do. Yeah, I've got some information. I know sometimes having a visual is always nice. So let me share my screen with everybody. I know you were just touching on the minimum down payments. That's a question that we've gotten from a lot of folks as far as, gosh, do I need to have a 20% down payment right now? Has that all changed? And so you mentioned that there were some programs that were still allowing less than that. So
absolutely. So these are the most common loan types that general buyers will run into. USDA is United States Department of Agriculture, and we are lucky enough in the Santa Cruz area, and California has an abundance of USDA eligible properties. They are going to afford zero down payment loan opportunities for buyers. In a conventional loan with a loan of up to $510,400, the minimum down payment is 3%. If you elevate to a larger loan size up to $765,600, you have a minimum down payment of 5%. FHA, Federal Housing Authority transactions, 3.5%, all the way up to a loan size of $765,600. And for our illustrious veterans who we are so grateful for their service, they have the zero down payment opportunity still and continuously.
Each, I have a question for you. Do any of those loans have any income restrictions?
The USDA loan does have income restrictions based on income per county. So, but USDA is the only one. Conventional loans, FHA loans, and VA loans do not.
And where can someone go to get that information?
USDA has a website directly where you can find out the eligible income. But what I would encourage buyers to understand is that your eligible income might not be what you understand it to be. Mm-hmm. And that's something that talking with a loan expert about what your qualifying income is will really help you with determining where you qualify with. It's not a simple process, but it does require specific information. And basically what I say about the entire process for loans is that it is very detailed and lots of different factors come into play. And that's why it's so unique to every individual set of buyers.
Yeah.
Awesome.
I always like saying it feels like a bit of a financial root canal sometimes with the, all of the information that needs to be provided and factored in.
It really does.
Yeah.
And it is, a lot of it, I think, is that people feel like they know what their circumstances are, but they don't actually know what their qualifying circumstances are, or they're looking at their credit score on certain websites that aren't the actual scores from the bureaus. And so they have a misconception of it. More often than not, I run into people who have old credit history. They stop looking at their credit and they think they're just forever doomed. And it's a very nice conversation to have with someone when you say, let's take a look at it, and you get to give them the information that your credit score is just not as good as it could be, but it's not horrible, and we can work on it. And that's something else that I think we've talked about many times, ladies. I really want all buyers to understand that the best opportunity is to look, to understand exactly where you sit. And I tell everyone, it's not whether or not you can buy a home, it's how and when. And knowing how you're going to get there will tell you the when that's going to become a possibility.
Right.
Great.
Great. Now, I know we had talked a little bit about, down payments and closing costs. There's some folks who are a little concerned as to whether or not they can cover those costs. And I think as the market's starting to shift, we're seeing more buyers asking for credits. Now, I know that was some information that we had slides for as well. I'm not sure if you wanted to touch on that now or.
Absolutely. That's a great topic to start with next. One of the other things that I've been hearing from buyers recently over the last few weeks is, gosh, I had my down payment and money for closing costs set aside, but expenses have been higher, income might have been lower, and I've had to tap into that. Have I just waylaid my opportunity? There is the ability to request a seller credit or interested party contribution, as it's called, in the industry. And as with all other things, you're going to catch the theme of here. There's a lot of different variety of what's available, and depending on the circumstances for each set of applicant qualifying criteria, what's available for a seller to contribute is different. So everything in our industry is really based on percentages of things. So when we're talking about percentage of purchase price or percentage of loan amount, so I try to make that really clear that in USDA loans, the maximum amount a seller can credit towards your closing costs, which minimizes the amount of cash that's needed from a buyer at closing, is 6%. In conventional loans, it depends on how much you're putting down on the actual purchase and what the occupancy type of is. So if it's your primary home, or if it's second home, or if it's an investment property, there are different qualifying criteria on how much a seller can credit or how much you can be credited from an interested party. That would be a builder or a realtor, anyone who has a vested interest in the transaction coming to close.
Yeah. Now, Mesha or Jeannie, how would you define closing costs? I know a lot of folks might have questions on what exactly those costs are that a buyer might ask a seller to cover.
Well, I think when I'm doing a buyer consultation, I not only talk about down payment. It's great to have, that money to put down, but you also have to have a little bit of a reserve for the closing costs that are required. Oftentimes there could be some loan fees. There are escrow costs, certainly, in terms of closing costs. Also to consider, if a buyer needs to have some inspections done, they need to have a reserve for those inspections, such as a pest inspection or a home inspection. Every lender is different in terms of their fees. At least, Mesha, you want to touch on that a little bit?
Absolutely. So I like to explain to clients that there are costs associated with purchasing a property with the actual escrow, the transaction where the property changes hands, and then there are fees that are associated with the loan. And depending on what type of loan, or whether you're buying down your interest rate, what kind of appraisal you're getting, all of those fees can come into play. So typically the lender fees are underwriting and processing. Underwriting is the process by which you determine a borrower's qualification. You checking their income, checking their credit, reviewing their assets, making sure that their criteria matches with the rules of the loan. The processing is the gathering of all the information, collecting the contract, making sure that the title and escrow work is done, getting through the appraisal. When it comes to the actual transaction, the title and escrow fees, and I know we touched on this in other conversations, but escrow is the process by which all the paperwork and all the money is managed by a neutral third party. And the title work is the legal work that's associated with the property. So buyers qualify for a loan as much as the property qualifies as collateral for the loan. So there's fees associated with that. And then in order to conclude the transaction, we have to record all of this with the county and make sure that that information has shown as publicly knowledge change of hands, change of ownership. And there's fees associated with that as well.
I know, Liz and Mesha, oftentimes when the buyer has come to a conclusion of what it is that they can afford in terms of a purchase, I'll do an estimated settlement sheet that will give them an idea of their down payment as well as the additional costs associated with closing a transaction.
Mm-hmm. Yeah. Sorry, and I just wanted to revisit our sides really quick here. I know we touched on the USDA and the conventional, but there's also the FHA and VA.
Right. So with FHA is Federal Housing Authority, that again is going to allow for a 6% contribution. VA is slightly different in that they limit the credit from a seller to or interested party to 4%, but they also allow fees to be paid on behalf of a buyer. So there is an opportunity to be able to get over that 4% threshold when it comes to countering how much cash a buyer has to bring to the table in VA specifically. Now, again, I think all of our watchers here and listeners are noticing a common theme. It's the if-then sort of circumstances that come into play a million times over in the loan and real estate business. And so I encourage everyone to really get clear on what's available to you and know the parameters of the product that you're looking in. And that will really help you understand how to offset your own expenses and capture a property with as little out of pocket as necessary.
Awesome. So this also, these various requirements that we've just been talking about, not only is it beneficial for the buyer, but in terms of us as realtors, I think it's important that we know, at least at a high level, enough information with regards to financing that we can guide our clients and then move them towards you.
Absolutely. It's imperative that the lenders and realtors work hand in hand for our clients' success, and that we all are transparent about what their opportunities are and where their availability lies. Some clients will have more than one availability for loan type. Some will be limited based on their current set of circumstances to one specific loan type. And definitely being aware of what's available to them, their maximum purchase power lets your realtors understand how to shop for the right properties for you that's not outside of your budget, and then help you offset those expenses and request seller credits that will be beneficial for your transaction in the long run.
Right.
Yeah. So, what advice would you have for buyers today who are thinking about purchasing a home either in the next couple weeks or months or years?
My advice is always start with getting formally pre-approved. Really understand your set of circumstances right now. Specifically, a lot of people are hesitant to share their personal information, and I absolutely respect that. These are conversations that you don't have with your darkest and deepest bosom buddies who will you share all of your life stories with, but you're not talking about credit scores and tax returns and bank account balances necessarily. So I would really ask all buyers to take into consideration that my role and the role of other licensed originators is to really help you understand what you have available to you. Our goal is to help you succeed with your purchase. And if we know everything and if you're transparent with us, then we can help you understand where you sit today and what might be available to you. After having that assessment, we can give some guidance on how to improve that situation or how to adjust to the opportunity of buying. It involves a credit check. It involves income verification, employment history, asset reviews, so bank accounts, retirement accounts. I'd also take into consideration that now's a great opportunity to come up with a budget. How much money do you spend on groceries? Do you have health requirements or lifestyle choices? Maybe you have a really expensive gym membership. All of those things need to come into play so that we understand how to best support you financially to succeed.
Yeah, Mesha, I know there have been so many times that I've had conversations with friends or prospective clients, and they're saying, well, I don't really want to buy today, but eventually in a year or two. And I always encourage folks to talk to you because they're able to set themselves up and position themselves even better for the future. Like you were saying, there's so many things that they can do to improve their credit score, their financial position, to really get into the home of their dreams when the time's right.
Absolutely. And there's no time that's too early. I mean, if for people, I tell people at those big milestones in their lives, if you haven't sat down, if you're decided you're getting engaged and you have not sat down with your future's partner and broken out all of the checkbooks and all of the bank accounts and all of the credit reports and had that conversation, now's a great time to do that and understand where you sit today and what your opportunities are. But also when you're sitting with a qualified originator who wants to guide you onto your best opportunities, we're also going to talk at educating you on different levels of your financial literacy. And there are aspects of the credit world that no one talks about. I don't know if you ladies got a book about how to have a great credit score, how to be a good credit candidate. I never got that. So I spend a lot of time talking with clients and dispelling credit myths to help them get to their highest credit opportunities. And I can't discount enough understanding your credit situation right now.
I know one of the things that I try to encourage buyers after they've been pre-approved and we're looking for a property is to live like they had that mortgage payment.
Absolutely.
Subtract whatever they're paying from rent from what their mortgage payment would be and squirrel that money away. And that would be an additional, amount of a down payment or money towards their closing costs. But feel what it's going to be like. With many first-time home buyers, Liz, I don't know if you felt the same way, but oftentimes, they aren't as cognizant of what their budget is until they actually sit down with a lender and then figure out, okay, well, this is what I can afford and what things will I need to cut out of my budget in order to make my dream of homeownership a reality.
Yeah, absolutely. And Mesha, are there any costs or fees associated with the early phases of the process? Applying or going through the pre-approval process?
Excellent question, Liz. Thank you for bringing that up. No, there's no fee associated with learning your loan opportunity. Some lenders will try to charge you for the credit reports in advance. Some will try to tell you that there's an application fee. And what I would encourage you to understand as a consumer is you have choices. Essex Mortgage, we're not charging for any of those things. We don't even charge you for the credit report in the transaction because it's an understood expense in the business. We need to know this information, and there's no reason why we should charge you to determine your credit worthiness. We're looking to help. So the consultation is free. It is going to take some time. You can apply online. A lot of different lenders will have apps that you can just download. Sadly, the industry has become so technology savvy that I don't get to meet a lot of my clients face to face anymore.
I guess that's good right now.
It is. It means I'm still able to help people and provide assistance. But oftentimes the only thing I know about a buyer is the picture of their ID when they send it to me. So I'll generally ask them to take a picture of themselves in front of the home when they close. And sometimes that's the only live image I ever get from them. So I definitely want everybody to know there's no cost for you to determine your purchase power. And it's really key that you do know that. And to highlight what Jeannie was saying, I encourage all of my clients to live as if they're making that payment as soon as they're approved, so that they know what that means for their lifestyle. And I tell everyone the same thing. I love tacos and ramen, but I don't want to have to eat them every day in order to have a roof over my head and keep the lights on. So homeownership is supposed to be a positive thing that really improves your life and your lifestyle. So we want to make sure that you are being reasonable about the expense that you're about to take on.
Yes. Yeah. And I know one of the other things we wanted to touch on today was just a couple of topics for existing homeowners and things like loan modifications and forbearance.
Absolutely. Forbearance is a hot issue in today's circumstances, and there's a lot of misconception about forbearance. And so forbearance, and Liz, I know we have a slide on this. You know, the root of forbearance is it's a temporary postponement of your mortgage payment without the fear of beginning a foreclosure proceeding. Now, that means that your payment is put on hold, but the loan is still accruing interest. Each individual servicer that is accepting your payments on your loan is going to have a different set of terms that they send you. The documentation that I've reviewed from a multitude of clients is all very different. So I really want to encourage everyone, read every word, read the fine print, you know, read their guidance on the website that they're sending you to in order to better understand this. The payments are not forgiven. They are not automatically attached to the end of the loan. You need to understand what happens in the specific forbearance that you're being offered. That forbearance right now, because of the COVID-19 situation, you only have to attest that your income has been impacted by the shelter in place or the order to stay home. There's no documentation that's required at this time, but they don't specify anywhere that they're not going to report to your credit report that your account is in forbearance. And they don't specify that they aren't going to report that this payment was made late and you're not paying as agreed. So while this is an imperative step for some people who have lost their income and don't have the ability to pay, I really encourage homeowners who still are getting paid to continue to make their payments so as not to impact themselves financially in the long run. And then one of the other big myths that's out there right now is that all payments are due within 91 days of getting a forbearance. That's not all circumstances, and you need to check with your specific servicer to understand what your repayment terms are after the forbearance, because that is going to, again, be very specific. And Fannie Mae and Freddie Mac, the government service entities that came out, they're the big rule makers of the industry, along with HUD, Housing and Urban Development, and FHA, the Federal Housing Authority. They have come out to clarify that during COVID-19 issues, that they're not requiring on a multitude of loans that 3-month forbearance that was initially issued be repaid in full on day 91. Servicers are even getting this confused because the CARES Act did not stipulate how the repayment process would go. So again, talk with your servicer, talk with your lender, make sure that you understand specifically the offer that has been customized to you, because there are a variety of repayment plans that need to be customized to your individual needs, and how that gets done is really about your cooperation with your servicer.
Yeah.
So in that, I know that we have also had lots of conversation about what happens after the forbearance is over. And if you run into the issue of you still don't have income to be able to pay your loan. And so after a forbearance, which is a pause in payments, then if you haven't brought your income back online, if your job isn't back to work, or if you're not working enough hours to support the actual payment in full, then you can apply for something called a loan modification. In a forbearance, nothing changes. The terms of your loan do not change. In a modification, the terms of your loan will change. So the number of years that your loan will last, the interest rate that you have, and the monthly payment that you're required to pay. A modification is an entirely different process than a forbearance and requires that you provide lots of documentation in order to verify the position that you're in. Unfortunately, right now, we don't have any official statement on what happens for people who requested the forbearance, indicating that they were impacted, but don't have any documentation to support that when they go to seek a modification. So again, if you can pay your payment, please do continue to do so. Forbearance is not an opportunity to just save money. It is really for those who need it most.
Yeah. Now, Mesha, I assume that even if folks can't pay their mortgage payments in full each month, even if they pay a portion, that would be advisable?
Well, so a mortgage payment is not counted as in partial payment. They're really, unless you get a specific agreement that allows you to do that. So making a partial payment means that that's not going to be applied in full to your monthly obligation, unless, of course, you have that special arrangement already made with your servicer. So again, depending on your specific set of circumstances, and I hate to sound like a broken record, contact your servicer, ask them, tell them what's going on with you. If you're a two-income household, and one of you has lost your income, it's reasonable that you have some money still coming in, but it might not be enough to make the mortgage payment in full. And I promise you, there are humans on the other end of these circumstances looking to help you understand how to be successful here.
Yeah. So Mesha, it sounds like, there are forbearance programs available where people can just push a couple of buttons and maybe get forbearance, but your recommendation is to talk to someone voice to voice, if and when possible, to really understand the details and the terms.
Absolutely. Unfortunately, because it is such a necessary item right now, and I know a lot of people who've been applying for unemployment have been feeling this, the hold times can be long to meet with someone face to face. It can be frustrating. You are worth it. Please spend the time to do this for yourself. Try off hours. Get up early in the morning, stay up late at night. Most of these servicers have 24-hour care providers. It depends on the volume of calls and the day of the week and the time that you're calling, but you can eventually get through to someone. And I've been on hold trying to get through to different servicers from time to time. And now some of the servicers are going to a place where you can put in your phone number and they will call you back. So you don't have to just sit on hold for sometimes hours, but when they are available, you get put in a queue and you become the next person up. But knowing your set of circumstances, know where you're at, if at all possible. I mean, uncertainty is probably the thing we're all dealing with the most here. But if you know that your place of employment has closed permanently, take action as quickly as possible. If you know it's temporary because your employment has not been deemed an essential service, and you're waiting for all of those non-essential services to open back up, know that this is temporary and that there are opportunities to help you during these times.
Great. I can't think of any other questions. Mesha, this has been really informative for a variety of our clients and potential customers. We hope that everyone will take advantage of at least listening through this video and giving you a call should they have any questions. What's the best way to reach you?
Yes, I think we have a slide.
Contact screen for us.
Wonderful, yes.
Easy for everyone to see.
Perfect, thanks, Liz. So you can call me directly, 831-435-0385. You can email me, mesha@essexmortgage.com. My time and my energy that I put into you are always at no cost to you. So please, if you have questions, if you're looking to understand your position, definitely seek guidance and clarification about what's available to specifically you. Your neighbor and your aunt and your cousin and your buddy's best friend's wife are not going to be in the same boat that you are in. So let's get you understanding your purchase power now.
Yeah. And I've got to say, one of the things that I just absolutely love about working with you, Mesha, and you as well, Jeannie, is both of you come from a place of service and education. Really, we all want to be there to answer questions for people and be a resource and offer guidance, even if, you're not going to be purchasing tomorrow or months to come. We'd rather see people doing the right things for themselves and their families. And that's, part of why we're here today doing this video for everybody.
And I agree, it's real estate isn't a contact sport, but we all work together as a team. And we look forward to the opportunity of working with anyone who's listening to this recording. And if you're not thinking of buying a home right now, please pass our information on to someone that you may know. Again, we're all about education. We're not about trying to grab some business from anyone else, but what we do want to do is make sure that all of you are educated in terms of the process of buying a home.
Yeah.
And with that, we look forward to your joining us next time. Next week, I think we're going to be talking about statistics which can be a little boring. We're going to take a look at how we can pep those up for you and give you an idea of what's happened during the month of April with regards to the real estate industry. We've been looking forward to getting these statistics and putting them together, and I'm sure will be very telling.
Yeah, we'll be looking at things like where the median prices have gone, listings and inventory, buyer demand, price reductions. If I'm sure those are still around and all that good stuff. So I'm a big data nerd, and I know Jeannie is too. And that'll really kind of paint the picture of what the shelter in place and the coronavirus have done to the market in the last month. So, anyway.
Well, everyone have a great weekend, and we look forward to your joining us next time.